The markets continue the roller coaster as we're looking pretty much red across the board, and it was just yesterday where we were green and significantly, in fact the best day in the Nasdaq since 2001, where around $5 trillion was added into the market. And we also have some good news in terms of inflation. It did come in at 2.4% for March, which was lower than expected, as well as core inflation being at a 4-year low. But again, there are other things happening in the market that is affecting the share price, notably tariffs, and extreme fear is something we are seeing yet again in the market. Whilst at the close of yesterday we were sitting around 16, we have now gone into the single digits, sitting around 7. But even with this volatility, there are still some strong opportunities in the market where valuation does look attractive for high quality companies. And today we're running through very quickly 5 growth stocks that we do believe deserve some attention for the portfolio, starting off with NU Holdings, which is down around 12% over the last year. Year to date pretty much flat, while the S&P is in fact down, and currently does trade towards the lower end of the 52-week range, with both Seeking Alpha and Wall Street calling this company a buy, and it trades at a forward valuation around the 20 to 21 mark. Now, just in their latest quarter, we can see revenue was up 24% on a year-on-year comparison, where in fact the number of customers also are up 22%, and the deposits up 55% year-on-year. This is truly a growth company. We can also see growth expectations over the next 4 quarters, all double-digit increases to the EPS, and over the last 4, they have at a bare minimum been in line, 100% track record. And if we look towards December 2026, they're trading at a forward P around the 14 to 15 mark. In terms of growth as well, they do get an A. Year-on-year revenue is up 49%. That is significantly above the sector at 6, although slower than their 5-year average of 101. Forward looking, they're estimating 32%, again well above the sector in the mid-single digit, but actually lower than their 5-year of 60. And in terms of other growth metrics, EBITDA growth 54%, EPS diluted growth 90%. We can see pretty much the company is expecting some very large growth figures, which are significantly above the sector. So we do believe it deserves the premium that it is trading for, and is definitely worth it, definitely one we would say to consider. And we also notice institutions who hold around 84% ownership, while sold around $5 billion worth of shares over the last year. They bought around 50% as much at $7.9 billion. And on top of that, in the most recent quarter for Q1 2025, we do see a lot more buying, 6 million versus 432,000 worth of selling. So clear to see institutions very bullish on NU Holding. Now, when we get to our intrinsic value, we get to around $15.43. With the current price at $10.40, you are getting a nice margin of safety. Remember, we start off with 10%, execute on that if it meets our 3 golden criteria: wide moat, strong financial metrics, good forward-looking data. If you believe that, a buy at around $14. And as we keep going to near the current trading price, we believe right now you aren't getting a 35% MOS just yet, but somewhere between 30 to 35, with Wall Street themselves seeing this at over $14 in the next year, translating to 37% upside. As we said, one for consideration: 30-35% MOS, 37% upside is NU Holdings. One maybe you've been buying on the hold list, or in fact one that you aren't considering. Do let us know. Before we continue, we also want to let you know we have released our latest free weekly article where we run through 2 stocks we have been buying after the market crash. Now, we release one every single Monday morning where we cover severely undervalued stocks as well as what's gone in the market over the last few days. So click below, you can sign up and read straight away, where you'll also be able to grab a copy of 35 severely undervalued stocks for the month of April. Lots of information for each one, the upside that Wall Street themselves see over the next year, and on top of that, a spreadsheet covering 97 stocks that Wall Street themselves believe have the most upside in the S&P. So click below, sign up and read straight away. The next growth stock we have is SoFi Technologies, which is down around 5% on the day. Over the last year, up 37%, and year to date, it is down around 30%. Massive drop, in fact, trading at the moment towards the lower end of the 52-week range, with just 1 buy rating from Seeking Alpha, and trading at a forward valuation around the 44-45 mark. And we can see their latest quarterly earnings revenue was up 19% year on year. We also notice their members have now broken through the 10 million threshold, and that is up 34% on a year-on-year comparative. Products also up 32%. and we can see their largest revenue driver, financial services, up 84%. In terms of growth as well, over the next 4 quarters, they expect 3 of them to be a very sharp increase, whilst also having a 100% historical track record. Bear in mind, this is a company that does continue to revise their guidance upwards, and in terms of December 2026, where they anticipate 50 cents per share, we can see trading at a forward valuation of 22.7. In terms of their growth as well, they get an A. In fact, year on year, 28%. Forward-looking estimated 22, well above the sector in the mid-single digit, but it is a little bit below their own 5-year at 47 and 28% respectively, with EBITDA growth estimated to be 42% over the next 12 months, significantly above the sector at 11.2. We also see institutional ownership at 38%, 770 million worth of sales over the last year, same time frame, twice as much buying, and we also notice the same does hold true in Q1, 4.3 million worth of buys, 150,000 worth of sales, and all in 2024, every single quarter, institutions were buying more shares of SoFi than they were in fact selling, so clear to see they are very bullish. Now our intrinsic value gets to just under $16. Now given the current price, we are anticipating quite a nice margin of safety, and as in fact we keep on going, you are getting at least 30% around the $11 mark. At 35, not quite there yet, so sitting somewhere between 30 to 35, very similar to NU Holdings. Maybe you prefer one or the other, do let us know. And Wall Street estimate this $14 over the next year, translating to 29% upside. And we have done a previous exercise talking about if SoFi does one day become the size of PayPal, then the price would roughly be around the $60 mark, meaning upside of 458%. But as always, let us know your thoughts about NU Holdings, SoFi, and the others we are going to cover. We then move on to Uber Technologies, which is down around 1 to 2% today so far. Over the last year, down 4%. Year to date, actually up 19%, whilst the S&P has in fact been down. And over the last 5 years, up 156%. Massive outperformance of the S&P. Trading pretty much bang in the midpoint of the 52-week range. Double buy from Seeking Alpha and Wall Street with a strong buy from Quant, and currently trading at a valuation of a forward P at 30. Now their latest quarter saw their revenue up 20% from the same quarter last year. We also noticed the number of trips are increasing at 18% year on year. Monthly active users also up 14%. Gross bookings up 21%. So lots of growth right across the board. And when we look at the next 4 quarters, whilst it does look a little bit mixed, Q1 they are expecting growth given the fact that Q1 last year 2024 was in fact negative EPS. And if we look towards December 2026, they're trading at a forward valuation around 21.9. We also notice growth does look strong at an A, year on year 18%, forward looking 16, well above the sector again, mid-single digit, but a little bit lower than their own 5-year at 34 and 27% respectively, whilst anticipating EPS growth over the next 3 to 5 years, 30%, when the sector comparative comes at 11.6. In terms of institutions, they hold around 80% ownership, 13 billion worth of sales over the last year, just above 19 billion, but again, we do in fact see in Q1 lots more buying, 156 million versus 3.6 million worth of sales, and the same holds true in 2024. Every single quarter, institutions were buying more than they were in fact selling. Now our intrinsic value gets to $104 derived from the DCF model, where we have the free cash flow year on year, average growth 90%. We have gone 10% moving forwards, although as you can see, low, medium and high, 8, 10, 12%. Numbers are subjective. Remember, you can grab a copy of this model by clicking on the pinned comment below, running through your own numbers, whether it's for Uber or any others. But based on 10%, the discount rate, we get the present value of future free cash flows and terminal value, add together with the cash, subtract total debt, get to the equity value, divide by the shares outstanding, and as you can see, $104 indicating 45% upside. But we'll also show you full transparency at the 8% point, $90, 25% upside, and for those that believe it should be a lot higher, at 12%, $120, indicating 67% upside. Now, as we do typically on the channel, take the middle rate at 10%, you are getting a very nice margin of safety. At 10%, a buy at $94, at 20%, a buy at $83, at 30, around $73, which is where we see this company right now. 30% MOS, Wall Street $92 over the next year, 28% upside. But we'll also show you, for those that believe 8% to be the most appropriate rate, given it is also more conservative, that you are still getting a margin of safety. In fact, you're getting around 20%, still might be enough for people to consider, especially if they do like the company over the long term. So give us your thoughts on the more conservative basis. 20% MOS, 28% upside. Is Uber, in your eyes, a buy, hold, or sell? We then move on to Robinhood, which is down around 3% today, but over the last year up 123%. Year to date up 10%. We do notice trading around the midpoint of the 52-week range and just one buy rating today from Wall Street and a forward valuation at the 33 mark. We also noticed their revenue was up 115% on a year-on-year comparative. Net deposits also up 42% year-on-year, plus 61% just from the previous quarter, and monthly active users also showing some very strong growth. In terms of their earnings, they expect 3 of them out of the next 4 to be growth. In fact, the subsequent 3 to be double digit with a 75% track record. And if you want to look to December 2026, based on the EPS, they are trading at a forward valuation of 29.4. In terms of growth, whilst they do get a C+, revenue year on year 58%, forward looking 30%, well above the mid-single digit of the sector comparative, and also above their own 5-year at 52 and 16% respectively, so they're actually growing at a faster rate. EBITDA also expected to grow 62% over the next year, and the sector does sit lower at 11.2. Reason why the score does get dragged down is because the EPS is only expected to grow at 7%, with the sector coming in higher at 10. Institutional ownership does sit at 93%, $3 billion worth of sales over the last year, nearly twice as much buying at $5 billion, and again we can see quite a lot of buying in just the most recent quarter, $28 million, with in fact the institution selling less at $454,000, so obvious they are very bullish. Now intrinsic value does come to $20, which is the average of Graham's and multiples, but bear in mind it is a bit more difficult to value this company, so whilst we do have an intrinsic value which is in fact significantly lower than the current price, one thing we would point out today is that Wall Street are very bullish and they see this at $65 over the next 12 months, translating to 55%, and maybe this is one that you are interested in. Maybe you did buy when it was cheaper over the last few days, or again, for whatever reason, doesn't fit your overall portfolio strategy. We then move on to Meli Mercado Libre, which is down around 3% today. Over the last year, though, up 29%. Year to date, up 13%. And over the last 10 years, massive outperformance of the S&P, up more than 1,380%, trading in the midpoint of the 52-week range. Strong buy from Wall Street, buy from Seeking Alpha, and does trade at a forward P at 42.1. Just their most recent quarter, revenue up 37% year on year, and we can see the different income streams showing some significant growth, as well as their fintech element up 29%. And they also expect some strong growth over the next 4 quarters in 2025, with a 75% historical track record, and December 2026 with the $65 EPS estimate. Forward PE is looking around the 30.4 mark. Now growth also looks very impressive at an A, year on year 38%, forward looking in the 30% region, well above the low single digit of the sector at 3%, but it is below the speed they have been growing at over the last 5 at 57 and 43% respectively. EPS though does look good, 27% estimated growth over the longer term, well above the sector at 11, but also notice over the last 5 they have been growing faster at 48%. In terms of institutional ownership, sits at 88%. They have been selling around $12 billion over the last year and buying about the same much, so we can't really say bullish or bearish, but one thing we have noted, at least in 2025, they bought a significant amount more than they've sold, 123 million versus 1.39 million worth of sales, so at least for the most recent quarter, institutions are bullish. Now our intrinsic value comes to $2,462, derived from the DCF model, where in fact we have used a low growth rate of 2%, extremely conservative, and you can see that does come to upside of 26%. So if you believe they'll only grow at 2%, which does seem a bit ridiculous, especially because they've been growing at a much faster rate, you are still getting a very nice MOS. At 10%, a buy at 2216, at 15 around 2,100, and at the moment we do see a nice 20% MOS with Wall Street themselves, 33% upside over the next year, translating to $2,593, But as always, give us your thoughts, whether you're adding to any of these growth stocks, maybe you're waiting for the market to settle, or in fact you have a completely different strategy. Don't forget as always to sign up to the free weekly newsletter, grab those spreadsheets, come and join us in the Patreon where we cover our weekly buys and sells, and as always, have a great day. We'll see you all on the next one.